Thank you for stopping to watch my video. I want to teach as many U.S. business owners, U.S. entrepreneurs, U.S. franchise owners, and 1099 income earners how they can save taxes legally with the Business Spendthrift Trust. It's legal. It's in the IRS Tax Code 643B. It comes from England way back when King Henry VIII started the Church of England. Yes, the same king who chopped off his wife's heads. He went to go tax the lords and ladies of England. They went back to the 12th century, the Magna Carta, and said, oh, no, King Henry VIII, you can't do this. This is contract law. It came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that will turn 365 years old in 2026. The United States is only turning 250 years old. Happy birthday. Our current tax structure went into effect February of 1913, and it's only grown and grown and grown since then. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. They can save taxes, we can save taxes. Hi, my name is Sally Gimmon, and I'm the owner of www.thetrustisyou.com. I work for a private law firm that was started 78 years ago by a Harvard law professor. He was so brilliant, he wrote 5 separate trusts to save specific taxes. The business trust, you'll stop paying federal and state income taxes year after year, generation after generation. The beneficial trust is for all U.S. investors. You'll stop paying taxes on any profits, including short-term and long-term capital gains, interest income taxes, dividend income taxes, rental income taxes, and royalty income taxes. Then there's going to be the mineral rights trust, if you have oil rights, shale rights, coal rights. Then there's a charitable trust. And finally, there's the senior trust for any person over 65 who's incapacitated. Maybe they have dementia, maybe they've had a stroke. I've only sold a few of these because it's a blind trust for the senior, and the family was trying to get them into a memory center, and they were doing a 2-year look back. Again, I don't care which trust you get or have, you're going to save in 4 extremely important ways. Number 1, you're going to stop paying federal and state income taxes year after year, generation after generation. You leave a legacy. Number 2, all your information is going to be kept completely private. This is on the federal level. LLCs, S Corps, and C Corps are on the state level. This trust will not hold LLCs, S Corps, or C Corps. You can keep them, but we highly suggest you shut them down. Do you realize anyone can go online to the Secretary of State or the Corporation Commission of your state and research the LLC, S Corp, or C Corp, either by your personal name or by the company's name? 40% of them get sued every year. That's a huge number. It's worse than Russian roulette. Number 3, talking about lawsuits. All lawsuits become frivolous and go away. The Spendthrift Trust is a titanium vault. No judge, I don't care if it's a county, if it's a state, or a federal judge, can break the seal of the trust. Here's one caveat. If you're doing something illegal, that can be broken. If you're not doing anything illegal, someone's trying to sue you because of a car accident or something, your car insurance will go up, but it'll go away. And number 4, if you're over 65 and making too much money, it will stop the IRMA surcharge that's on parts B and D of Medicare. They say 3.5 million seniors are paying a surcharge. I think that's criminal. So with the business trust, you will stop paying federal and state income taxes. My example today is somebody who contacted me, the kind of interesting. I met them at a Alignable meeting in Charlotte. He has a Made in the Shade franchise. He files single. He lives in Charlotte. This is his 2025 numbers that he gave me, but I'm using 2026 taxes on it. So with federal income taxes for 2026, he would save $37,681, and state income taxes would be $7,495. Here in North Carolina, our state income taxes are 3.99%. So if he made the same amount of money in 2026 that he made in 2025, he's planning to make more in 2026, but he would save $45,176. If he only started this trust in 2026, he would be saving $3,764 every month. $376 in April, $3,760 in May, in June, in July, August, September, October, November. Now, with the money he's saving, he can put this back into his Made in the Shade franchise. He can pay off his mortgage. He could buy a new vehicle. He could take his family on a well-deserved vacation. He can give to his favorite charity, or he could save for retirement. It's his money. When he started the trust, I'm the one that would give him the contract. He would send the contract back to me. He would pay me directly. I pay the law firm. I pay for Julie, who gets the EIN number and the letter for the bank for him. He went to the bank he wanted to work with. Then there's Anna Maria and her team that will sit down and work with him. The first meeting with Anna Maria, she won't talk to him until he reads the trust from page 1 to the end and writes down all his questions. He and I are friends. He told me he only worked with Anna Maria for about 2 months. He understands it. It's easy peasy to use. His clients pay the new bank account, the new routing number and account number, and then he makes all his payments for his car insurance, his gasoline, his homeowner's insurance, his mortgage, his electric bill, everything else from the business trust. He has access to this money with a debit card. He can go into the bank and get cash out, or at an ATM get cash out. He started this trust halfway through 2025. So when he filed his taxes for 2025, he did file partial 1040 tax return, and with the trust, he will file a 1041 tax return. We introduced him to the CPA who knows how to file those taxes for him. The law firm vets the CPAs to make sure they're doing things correctly. Paul Benson, 78 years ago, started the Benson Financial Trust. In 78 years, not a single trust has ever been audited. Now his grandson and great-grandson run the law firm, and they're so confident in what they do, they will give you a certification saying if you get questioned by the IRS, they will defend you free of charge. In 78 years, quite honestly, it's happened one time only. A senior IRS agent went down to Houston, where the law firm is, spent 5 hours in the boardroom, approved the trust. 2 weeks later, he sends an unsolicited letter back to the law firm explaining how, I hate this room, it keeps going up, how he approved it. He retired from the IRS, and then he became an affiliate like I did. He was using, come on, turn back on. That he then went through his entire Rolodex and went back to all his clients. I wish I had his Rolodex. So if you want to set a free 30-minute tax breakthrough session with me, please go out to www.thetrustisyou.com/scheduling. This is legal. It's in the IRS Tax Code 643B. Why wouldn't you want to learn the secret of the rich? Thank you for watching. Have a beautiful day.